Brexit news, unfortunately, isn't very positive in terms of the implications for sub-Saharan Africa. We woke up today to the news of a vote in favour of Brexit. This has meant that the risk appetite that had come back into markets in quite a strong way in recent trading sessions has given way. It has been replaced by greater uncertainty about what might lie ahead and greater levels of risk aversion. It is still very early to say how long markets are going to be feeling fairly skittish about prospects, but when something like this happens, as has been rightly anticipated by Kenyan policymakers, there is the risk that emerging and developing country markets, frontier markets as well, may see sell-offs in their asset markets. For a country like Kenya that runs a current account deficit as well as a fiscal deficit, which has become dependent on offshore flows for the financing of those twin deficits, this is negative news. Unless we see a broad-based improvement in risk appetite, with Kenya looking to issue externally in the new fiscal year. In fiscal year 17, Kenya has already stated that it's looking to do another Eurobond issuance. It will have to look very carefully at when market conditions might be conducive to that borrowing.
Now, it occurs to me with the sort of drops we've seen this morning out of Asia, beginning in Asia, going into Europe, starting to see them now in the United States, it's almost like no one had actually believed that Brexit was going to happen.
The vote was always expected to be very close, but there is a sense of people having been taken unawares by the situation. And that may well be because of the expectations in the run-up to the referendum that actually the Remain camp was in a much stronger position. So yes, there is an element of surprise, and this has been reflected in the market reaction. We shouldn't forget that a lot of those EM currencies, the frontier markets, had actually rallied in the run-up to the referendum results coming out.